Hello and welcome to Gemcast. Let's talk about Central Asia. Why are Gemcorp really interested in this region? Why are we doing deals here?
It's a $500 billion economy, 80 million people, fourth largest gas reserves, 40% of world's uranium is produced here. The region can feed the entire Western Europe with its food production. Yet, I bet you, if you ask most of the allocators, they will not be able to name 3 out of 5 capitals.
Don't put me on the spot, please.
We'll not do that. We'll not do
In Kazakhstan, although it is well funded, given the retreat of the Russian capital, we still see this opportunity gap for the key industries. Uzbek as a country is really on the upward trending. In addition to the gold reserve, the country is actually producing gold. I think it's the 10th largest in the world.
This is the specialty of Gemcorp, managing the FX risk and structuring transactions around hard currency flows.
What's deal making like culturally there?
When you go there, be prepared to be blown away by the hospitality.
We also had the pleasure to meet some of the governors. So hardworking and also so keen and welcoming, really encouraging for private investors like us.
What do we think kind of comes next for Central Asia? Hello and welcome to Gemcast. We're in less salubrious times than we were for the last episode, back in the studio here rather than at the Cabinda refinery. If you didn't catch that episode, then make sure you go to YouTube and watch it. Get to see me in an interesting hat. Otherwise, today we are talking about Central Asia, the opportunities, the sectors, the countries within this abundant and exciting region. To have this discussion today, I'm joined by Sharon Lee, a Senior Vice President of our investment team, and Asad Hajiyev, the Senior Executive Officer of ADGM and a Senior Portfolio Manager. Before we get into Central Asia, let's start with my favorite question, which is for both of you as you're new on the pod, introducing yourselves, telling me about your job and why you're passionate about emerging markets. So ladies first, Sharon, do you want to introduce yourself?
Thank you, Tom. So I'm from China originally. I've been at Gemcorp since 2019. I guess I'm invited here because I had the pleasure to lead the recent Central Asia transactions at Gemcorp. As for why I'm passionate about emerging markets, really about the potential. So I'm from China originally, and I've seen China in my lifetime growing from barely being able to feed every mouth to where it is now.
Wow.
And that's an example of the EM world. And I want to be part of that growth in the whole emerging market.
Awesome. Thank you very much, Sharon. And Asad?
Delighted to be here. Thank you, Tom. Great to share this Gemcast with Sharon. My name is Asad Hajiyev. I'm originally from Azerbaijan, so in fact, from the region. Started my career after doing 1 year of military services at BP in oil and gas finance. And in fact, I was wearing the same kit that you were wearing on your last Gemcast.
Okay, good. I think you looked a bit better in it than I did, I would imagine.
I doubt that, but thank you for trying.
Amen.
And the fast forward from that experience, which I enjoyed deeply, I switched gears and went to investment banking, spent 8 years at JP Morgan in London between emerging markets, ECM, natural resources M&A, and ultimately special credits. And joined Gemcorp now 8 years, of which 6 I spent here, sitting not far from Sharon at all, and 2 years now in ADGM.
Awesome. Brilliant. So we really do have the perfect guest. So let's get started. What do we mean by Central Asia? Let's just start with a simple question. Why are we talking about it today? Why are Gemcorp really interested in this region? Why are we doing deals here? Kick us off, Sad.
With pleasure. It's such a nice opportunity to talk about the region that is, first of all, vast. It's a $500 billion economy, 80 million people, 40% of world's uranium is produced here.
Oh, okay.
Fourth largest gas reserves. The region can feed the entire Western Europe with its food production.
Okay.
Yet, I bet you, if you ask most of the allocators, they will not be able to name 3 out of 5 capitals of the
You
countries.
don't put me on the spot, please.
We'll not do that.
Good.
We'll not do that. We'll not do that. Why we're excited about this right now is a couple of things. So first of all, the region experiencing very strong growth. Last year, the GDP growth was just under 7% compared to developed markets of 2%, and then the rest of the EM between 4 and 5. That's a double uplift on the growth.
Okay.
In addition, given the latest geopolitical changes, the trade routes are being repurposed. It's a connector economy. The population is extremely young.
Yeah.
And 20 million people, young workers, are expected to be added to the economy over the next couple of years. So we like the macro, we like the positioning and the momentum.
Okay. And practically speaking, what are the countries here? So there's Kazakhstan, that's the big one, but what else do we have around it? How does this flow into the Caucasus? Where do we sort of demarcate Central Asia on a map from our perspective?
Absolutely. So if you think about it, you've got the Caspian Sea, which separates Azerbaijan from the Central Asian countries,
Yep.
of which there are 5, right? So you've got Kazakhstan, the largest, you've got
Yep.
Uzbekistan, you've got Turkmenistan, Kyrgyzstan, and Tajikistan.
Okay.
And it's an important question because a lot of time people say, well, Central Asia, people sort of look the same, but they don't. It's not.
Okay.
It's like Africa.
Right.
It's different countries. There's connectivity, but fundamental differences that exist. And we are excited exactly by that.
Okay.
Also, just to add from China angle, given the Belt and Road Initiative,
Yeah.
the bilateral trade between China and Central Asia has just exceeded 100 billion. And I think more than over majority of China's trade into Europe is actually now transiting over Central Asia. So huge opportunity set over there.
So the old Silk Roads. Let's get into geopolitics then. You took me there straight away, Sharon. So I'll go there as well. Thinking about the map, Central Asia, this is obviously a traditional Russian heartland, I suppose, historically. You have China one side, Europe the other, and America's probably somewhere in the mix as well, I would imagine. So how are those countries dealing with that geopolitical, to some extent, maybe a gift, but maybe it's a curse? How do they manage that?
Historically, Russia has been the main investor, but post the war era, the sanctions and various other reasons, Russian capital has retrieved a little bit over there, which is actually also one of the opportunity set.
Okay.
Maybe pass on to Asad for more details on the geopolitical side.
This is exactly the point. This is the opportunity because until now, the region was very much funded wholesale by Russian banks.
Yeah.
With the change in the structure of financing, there is gap in the private capital. That's one. 2, there are new trade routes that are being created. There's need for more infrastructure. Sharon kind of mentioned exactly the point. Now, a lot of the transactions are trying to be rerouted through this new and old, actually, route, which is the Silk Road.
Yeah.
And consequently, we don't think of it as an adjacent problem as such. In fact, it's a connector economy that has all the reasons to not only excel, but benefit from the fact that the world is in need of diversification, reassuring, and onshoring. So momentum for us is perfect. Russia does play an important role because the remittances to likes of Tajikistan and Uzbekistan still constitute a large part of GDP. But as a matter of opportunity to provide financing, the market is wide open.
Okay, interesting. Touched a bit on the macro in the start. What's the dynamic here from a macro perspective? Are these economies growing? You talked a bit about demographic size, some sort of natural resource dividend. What's the macro dynamic driving them? How does it look across the different countries that you mentioned? Are they running at different speeds, same speeds? Help us understand the macro backdrop here.
Absolutely. I'll try to be brief here because it's quite a lot, and we'll focus on 2 largest countries. So Kazakhstan first. It's the biggest economy, 300 billion GDP. It has wealth of natural resources.
Yep.
Uranium we mentioned is 40% of global production, and the agricultural side.
Okay.
The country is looking to diversify, attract additional capital, but the economy is overheating a little bit insofar as the base rate in the country is now 18%. We expect that to normalize probably to 14, 15% over time, but there is an opportunity to provide flexible capital. Now, if you look at the context of Uzbekistan very briefly, it's a story of reforms. They, differently to pretty much most of the countries in the Soviet Union, including Kazakhstan and Azerbaijan, they did not rush in the 1990s to privatize.
Yep.
In fact, the state retained most of the control over the economy. So that provided both graduality and tactical thinking about which assets to privatize when. So recently we've seen privatization in the banking sector. There's a very big pipeline coming on the table. So the momentum is great in both countries. There's a yield opportunity, there's withdrawal of other capital, there's a privatization push, and finally, as it's applicable to most natural resource-driven economies, there's a need to diversify.
Okay, so we've got a pretty positive macro backdrop. We've got an interesting geopolitical situation that probably puts them in a little bit of a sweet spot. What's the funding gap here then? Where does GemCorp fit in to the ecosystem? Where in the market are we looking? Do we get squeezed out by state-owned entities? Help us understand that, Sharon.
Really good question. it's also quite different market by market.
Yeah.
So Kazakhstan, for example, is very well funded overall, both by international funders, but also the local banks.
Okay.
Uzbekistan, on the other hand, is still in the process of opening up.
Yeah.
So you have the influx of DFIs like IFC, BRD coming in,
Okay.
chasing kind of more the larger deals slash renewables or
Yeah.
certain impact angles, but leaving the mid-cap corporates kind of
Okay.
relatively underfunded.
Yeah.
And whilst the local bank liquidity is not as structured and is not as adequate compared to Kazakhstan and the rest of the Central Asia countries, although being small, still also presents huge opportunity sets. We can talk later. We actually funded one of the Kyrgyz deals earlier this year. So in terms of Uzbekistan, our main focus would be mid-cap, kind of corporates which are not funded by local banks, not sufficiently funded by local banks, but whilst not as interested or chased by international funders. In Kazakhstan, although it is well funded, given the retreat of the Russian capital, we still see this opportunity gap for the key industries, for example, the resources and trade finance opportunities, etc.
Yep.
Also structured finance, asset-backed finance,
Okay.
maybe also acquisition financing, which is less offered by the local banks. Again, we're probably targeting the smaller size so that we're not competing with the big international funders.
Okay.
We're looking for the spread, the alpha, rather than competition and crowding the market.
Okay. And given the composition of the economy, we're doing lending to state-owned enterprises, quasi-sovereign.
Of course, yeah, thank you. With that, yeah, we're definitely keen to look at that as well, to release to state-owned enterprises, so as to release the funding pressure from the state directly. Two of our recent transactions were actually from that angle as well. And we try to create a spread over the sovereign curve whilst maintaining the risk profile.
Okay. Kind of hearing this story, and I'm thinking this sounds pretty good. You've got countries that are investment grade. You've got relatively developed banking sector. Where's the spread here? How are we getting compensated for some of the risks that we're taking?
Exactly. Kazakhstan is an investment grade country.
Yeah.
Right. The sovereign yield curve is in mid-single digits, but the base rate is 18%.
Okay.
And the Kazakh currency has depreciated over time vis-a-vis the dollar.
Yeah.
That gives us an opportunity to play, because this is the specialty of Gemcorp, managing the FX risk and structuring transactions around hard currency flows.
Okay.
Specifically, we're targeting for the region mid-double digits for
Okay.
corporates and low double, high single digits for quasi-sovereign.
Okay.
If you are looking at the developed markets, private credit,
Yeah.
that is 700 to 900 bips of pickup, of which you can say 200 to 300 is geopolitical risk, whatever uncertainty. The rest is origination premium.
Okay.
So us being on the ground, going to the conferences, meeting people, and actually talking directly to the borrowers provides that alpha that we can generate by being flexible in the form of capital we provide, and also, most importantly, being quick.
Okay. So what kind of deals are we doing? What have we done? So far, I think we've done quite a few. Do you want to sort of shed a bit of light on those, Sharon?
Yeah, happy to take that. So we've done I'll very quickly cover the three kind of signature deals we did in the Central Asia region, two of which are quasi-sovereign. One is in kind of gold mine.
Okay.
The two actually, the quasi-sovereign are also very different. One is in USD and one is in Uzbek Sum, which is the local currency in Uzbekistan.
Huh?
So the first one we did was the kind of a short-term bridge to LPN issue for the quasi-sovereign at the state-owned entity to fund the kind of fundamental agriculture program of the country. So what yield we're getting, what we got was low double digit, which is actually a significant uptick to the sovereign curve. If you to take the same duration, which was kind of in the mid 7-8 range. So that's a great example of what Asad mentioned in terms of spread over, that's the alpha we can get on the duration adjusted basis. Second transaction we did on the quasi-sovereign side is the Uzbek Sum transaction, which is super interesting because we're getting high double digit returns. Well, sorry, high teens. Let me correct myself.
19.
That's a bit too much. I would love that. So, but having said that, there is local currency risk. We don't typically do local currency, right? As a fund, we are a USD fund. But in this particular case, we took a view based on the macro and also based on the historical trend of the country. the Uzbek sum has actually been appreciating over the course of last year, and we expect it to. Our view is it will continue to stabilize/appreciate over the course of the loan life, which would give you a stable/even above high teens return. Is what we're projecting.
Yeah, and to add maybe to that, did you know that the Uzbek central bank has more gold in its reserves than the Bank of England? And 80%.
Well, that sort of doesn't surprise me actually, but that's maybe a different story.
80% of the FX reserves is gold.
Yeah.
The rest is self-explanatory. So we took a view exactly on the long currency. So far, I've been correct. And this is another element where we have a very strong quantitative team that does a macro assessment.
Yeah.
We don't go into the situations local currency lightly, but this is one of those which we can say is a successful one.
Well, let's talk about FX then. So you talked about that Uzbek som deal, and as you say, that is something that isn't something normal for Gemcorp. So how are we trying to make that distinction in terms of doing that in local currency, but then also where are we saying, look, we want to be in USD because that's kind of our core expertise. And then if we're doing those deals in USD, what is access to currency markets like in the region? Are they highly liquid? Can borrowers get access to dollars?
Yep, very good question. So maybe I should have clarified. In this case, we're taking the FX rate risk, but not conversion risk,
right?
I.e. the settlement currency is still USD.
Yes.
Also, should mention Gemcorp as a fund, our return or our performance is still measured in USD, which is why the FX risk is particularly essential. So in this particular case, we took the view based on, well, maybe stepping back, the first element you look at is what would be your return if you actually do the hedging to avoid the USD risk, to avoid the FX risk. In this case, the answer would be single-digit return, or probably just around 10, right? Which is really not worth it, or really not what brings you the alpha that we are looking for. Therefore, we took the view that we should do active monitoring given the outlook of Therefore, we decided to look into the currency and see if it's worth doing local currency. So for that, we did several analysis, right? So you look at historical trends, you look at forward-looking macro situation, and you do stress tests. So on historical, you look at, since the currency reform of the country in 2017, what has happened? COVID, for example, only 10% drop. High teens absorb that easily. Also, that's the extreme scenario, right? What else? Basically, we looked at the historical extreme events, and in any of those, it's all affordable risk, put it that way. And on the risk-adjusted return basis, local currency really performs for this particular transaction. On the forward-looking basis, on macro, as Asad already mentioned earlier, right, Uzbek as a country is really on the upward trending. Also, the gold reserve definitely helps. In addition to the gold reserve, the country is actually producing gold. I think it's the 10th largest in the world, rather. So that production also gives you confidence or give the country additional support for the reserve, which preserves the currency value. So on a forward-looking basis, we took a view as a committee that the currency is expected to stabilize/appreciate further, which means on the risk-adjusted return basis, the transaction holds its fit.
Okay. Thinking about these transactions we did, and I'm always interested in the sort of cultural aspects of deal making in different countries, different regions. And I think it's as a business, one of our sort of structural advantages is that we have people who understand those cultural dynamics. Maybe Asad, given you're from Azerbaijan as well, what's deal making like culturally there? How does it different to the typical deal making that you see in the US and the UK and developed markets? How does it differ?
Very good. First of all, when you go there, be prepared to be blown away by the hospitality. That is extreme generosity in a very positive sense. So personalities come first. That said, people are extremely trade and business oriented insofar as the region has always been historically on the route where traders came and went. So the culture is very entrepreneurial. The median age is in mid-20s, right? 2 times younger than in Europe. So hence the vibrant population that requires a bit of support. What we found extremely refreshing is when dealing with the counterparties, they are not only willing to listen, but they welcome your feedback on how to structure the trade. This is a difference to the way things can be done in developed markets where you kind of get served a term sheet, you have 2-3 terms you can move. Here, it's a blank sheet of paper. So that is refreshing in itself. Importantly, the counterparties we've always interfaced in the region, they're proud of paying on time, being precise, reviewing the documents with diligence. So in my humble opinion, absolute pleasure to work. We look forward to the trips. We've done several. 2 fun facts to quickly mention. For those of you who haven't been, I strongly recommend go to the region. Kazakhstan is the largest landlocked country in the world. It has the Baikonur launch space station for the International Space Station. So every astronaut from Japan or United States or Europe that went to International Space Station,
they go from Kazakhstan.
Correct. And Uzbekistan is one of the 2 double landlocked countries in the world.
Double landlocked country.
Second one being Liechtenstein.
Okay, fine.
So there we go. So a little bit of
claim to fame.
tourism action here, but yeah.
That's amazing. Also, just to add on the deal making experience. So I've been on the trip with Asad and Paveleta to the country, to the Central Asia regions. I was so impressed not only by the corporates and people. We also had the pleasure to meet some of the governors, and they were working like 8 p.m. We had meetings like 8 p.m. We had meetings on Saturdays. Like people were just so hardworking and also so keen and welcoming in terms of foreign capital in this process of opening up, which is really encouraging for private investors like us, right? We'll see not only the strong state support in this influx of capital, but also they are working hard for it, right? You don't get, at least I haven't personally seen this level of 8 p.m. Saturday meetings in Europe or in any other countries I worked in personally.
No, that makes sense. It's always fascinating to hear those little sort of on the ground tidbits and things you pick up, because I think that you're just so much more than you're going to pick up at a spreadsheet, right? Which probably actually neatly leans into what's Gemcorp bringing to the party here. Like, so maybe to the point on the spread question, like these are not some of the other markets where we do business in where there is massive capital scarcity. So, and my sense is that some of the bigger players will be in and around some of the big deals here. So what's our structural advantage? Like, how do we manage to make it work in Central Asia where maybe some other people can't?
2 quick answers is one is tailor capital structures, and second, targeting the right segment of the economy. So I'll start with the latter. There's plenty of DFI capital. Middle Eastern investors are deploying into renewable space. So the countries themselves, they're boasting, hundreds of billions of FX and otherwise reserves. And as you say, they're quite dollarized economies. However, given the youth of the population, there's a big segment that requires support before banks even look at them. So that's one area we love to play. We help businesses grow. We share some of the success. We never burden anyone with very high interest rates just for the sake of doing that. But if things go well, we hope to participate. That is one element. And the second element on this is that Gemcorp, by bringing its global emerging markets DNA, hopefully brings some of the knowledge. By working with the counterparties in Uzbekistan, Kazakhstan, and other countries in the region, we share some of that. We learn from each other, and then it becomes a snowball effect. More and more people find out that we're doing things well. Specifically, as you know, Tom, about 20% of the capital we've deployed since inception came from co-investors. And that's what makes us proud. We have a number of parties who trust our structuring experience. We open the door on a deal, more people come. So not only we bring hopefully knowledge on the ground origination, but also amplification of capital.
Okay.
Also, just to add, Gemcorp, one special point about Gemcorp is we really try to get a deep understanding of the country, of the regions, right? So we travel there. Not only do we meet the borrowers, we also meet, I mentioned, like government or the IFM, the IFC, BID, all the cohort lenders, or basically absorb as much information as we can to make a view of the region overall and to try to find best deals. Also, should have mentioned, we also have a kind of long history for the region. Our chief investment officer, Paveleta, was one of the first street economists covering the region in Kazakhstan I think back in 1997, 98. So, our depth of knowledge is not only current, but also coherent of the history and the changes to identify the opportunity set from there.
Awesome. So what's the outlook? What's our conviction? Is there kind of sectors, countries that we're particularly bullish on? Like, what do we think kind of comes next for Central Asia?
We want and need to increase allocation to the region. The opportunity set is vast, and in the pursuit of diversification and yield is a perfect time to be there. We feel like the private credit universe will discover the region, same way they've discovered Middle East 5 years ago and LATAM 20 years ago.
Yeah.
So while the lane is open, we would like to drive and capture the opportunity. More specifically, the allocation is diversified across sectors, right? There is a natural resources angle, but we are very good in trade finance.
Yeah.
And that is fundamental in the context of what we're discussing, new trade routes being established, countries diversifying away from existing trading partners. For example, Kazakhstan's third of their exports goes to Europe.
Yeah.
So it's a very well plugged in economy. And as things change, populations grow, and the economies expand, there are many opportunities where the first mover advantage is where we'd like to thrive. And by doing so, we're not selfish or greedy. We're very happy to work with co-investors.
Yeah.
And a private credit game is not a competition game. You risk share, you amplify capital, and therefore deliver more utility value to the counterparties you play with.
Awesome. So with that, I think we'll wrap up today's Gemcast. I think the one thing I'll take from your closing comments, Asad, was the perfect time to be thinking about Central Asian private credit. Thank you very much, Sharon.
Thank you, Tom.
Thank you very much, Asad. If anybody wants to find out more about Central Asia or about Gemcorp, then visit www.gemcorpcapital.com, and thank you for listening.